talk about today, just with the changing markets and everything. I've gotten a few messages from people, seller said this or buyer said we're waiting for the market to crash and this and that, before we make moves. And these conversations are going to come up a lot, right? But if you notice something about real estate is people are always going to say that they're waiting for something, like when the market was going up, people were, no, I'm going to wait till the market gets higher and higher and higher because I want to get the most money possible or whatever it is. And then now that the market's shifting, you got the people, oh, I want to wait till it bottoms out or till it crashes and this and that. The thing with that, because I've had these conversations for many years, is for one, nobody ever knows when anything is going to happen. Nobody knows when we're at the top of the market. Nobody knows that we're at the bottom of the market until it starts going the other way, right? Like that's literally when you literally know, oh gosh, now it may be at the top of the market because why? Things start going down. Or when they're down, oh snap, now we're at the bottom because things are starting to go up. So for one, it's very important to set that clear expectation with clients that you just never know. Secondly, whenever I am talking with the client or helping them overcome whatever this objection is, the conversation that I always have is, what are your specific goals, right? So what is your purpose for wanting to buy or sell this and that? Like, because everybody has a reasoning behind it. And they may say like, oh, I just want to make money, or oh, I want to save money, but oftentimes there's an even deeper reason, right? Like it's why now? Why do you want to make money? What is around the corner that you need this money for? Or you're trying to save money. What's the real situation behind it? Like, do you not have the money possibly to close on a property? People will say things like, oh, I don't want to overpay. That line right there is BS, because the pricing and values that come on real estate are literally what people will pay for them. That's what dictates the pricing around real estate. And so there's no magical database that says your property is worth X amount, or this is how much this property is really worth. No, it's worth however much someone will pay for it. And so to say things like, oh, I don't want to overpay, you're not overpaying. You're paying what the market is dictating, right? Now, you're probably in your head making a reference point back to 2017, right? But we're in a totally different year, totally different era. And so overpaying is not even relevant, right? So another thing, finding out what their goals are and what their plans are, and always giving the outlook ahead of the curve. Okay, what does that look like? Okay, Mr. Seller or Mrs. Buyer, you told me that your goal is to get this property and in 5 years you want to sell it, right? Because this is just a temporary property for you. Okay, so now with me knowing that information, my advice that I give to them is pricing ahead. So or is looking ahead. Okay, so we know what's happening with interest rates right now. What are they doing? They're going up, right? They're going up at a pretty rapid pace, and more than likely they're going to stay kind of high for a while, right? Until the economy needs to be re-stimulated, and then they're going to, pull some tricks, and it's just going to get us into a deeper hole. But however, if we're talking 3 to 5 years, right? Think about what that can look like in 3 to 5 years. We know that home prices are kind of stabilizing, kind of going down, but again, stabilizing. People's lives are going to adjust, right? People's lives are going to adjust to the inflation. They're going to adjust to the interest rates. They're going to adjust to all that. That's how it's always happened, right? People can sit here and say that they're waiting around, but what ultimately is going to happen? Adjustments. They're going to start getting raises, or the minimum wage is going to go up, or things like that. Like, things are going to adjust. And so to wait until we go back to 2007 or 2008, it's not realistic, right? Things don't work like that. And so really having these conversations with people, like I had a conversation with an agent the other day. She was like, hey, my buyers don't want to buy right now because they're waiting on the market to crash. Okay, so of course, my first question was, okay, when is the market gonna crash, and how will they know? Okay, and then my question went to, okay, what do you think is going to be different during that market crash? Well, you being a buyer, we see what's happening with interest rates, so you're probably going to have an even higher interest rate than what you can have right now. Okay, so you're already putting yourself, putting your affordability less than what it is right now. Second, right, when those properties do go cheap or do go below market value, who do you think are going to be the first people in line scooping those properties up? Investors. And how are they going to be scooping them up? They're going to be scooping them up with cash. Okay, so where does that put you, being someone who's getting financing, competing against a cash investor? And not just one cash investor, but probably a lot of them. Okay, so, and then what is the end goal? You know, is it about having a place for you and your family, right? Are you overpaying for milk and eggs and gas right now? You're still doing it. You're still doing it. And everything in this economy works the same way. There's people still investing in stocks right now, investing a lot of money. Why? Because the stock market is down. Those are solid investments. And they're coming in with buku funds. Same thing is going to happen to real estate. People with money are going to be coming out the woodworks. So again, what is the end goal? There's always a way that you can tailor the conversation with these people in order to make something happen right now. There's always a way. It's just about pulling out all your cards and pulling out all the stops and really understanding how these economics work as it relates to real estate. You know, one thing that you all may notice, or I'm not sure if you've noticed and been paying attention to it, there's a lot of people trying to lend out money right now. There's a lot of people trying to lend out money. Why? Because they make more money on it. They make more money on these interest rates. The qualifications are softening up a lot, you know, but think about, if we think to the past, when the economy was low and that market crash did happen, what happened with lending? It got extremely tough, right? Because they started putting in all these different overlays, you know, whereas before someone could qualify with just having a name and a birthday, you know, but this is our plan to make sure this doesn't happen again, right? All this stuff is a cycle. They just start renaming it something else. These loan programs that are out there right now probably won't be the same loan programs when that crash happens, but then it'll get made up to sound like something different as they try to get the economy going. But people have to understand what advantages they have right now. And it's our job as agents to make sure that we are right fitting people correctly based on what their goals are. You know, that conversation is going to be different with investors, different from first-time buyers, different from people who are leveling up or getting vacation properties, people who are getting commercial like that. This conversation is different for everyone. However, us as agents, it's important to understand what's going on so that you're able to tailor that conversation to the people and make sure that you're truly right fitting them and not leaving them to their own ignorance from just watching NBC. And that's another thing. Markets are different in every different place, right? Like it's different. What they say on the NBC nightly news is completely different from what our news channels say here locally. It's crazy, right? But it's completely different. We've just gotten new announcements here recently. The World Cup coming, another couple of headquarters moving here. Like that's our local news. And so when they talk about real estate, it's a different conversation than what this NBC nightly news is saying. But if you got people listening to that and not really paying attention to your local stuff, then they're getting mixed messages. And so they don't have accurate information. Pricing ahead of the market, right? Like we're in June right now. So we're in the summer. We're going to be here in this summer market until probably the end of September, right? Summer markets historically are higher prices. This is called seasonality, right? They're historically higher prices because there's more of a demand. So what's happening in the MLS, people want to make it seem like, they put these posts on Facebook and make it seem like, oh, now everybody's rushing to sell. Everybody's trying to get out of it. These homes are sitting on the market. No, we're freaking in the summer. This happens every year. Like this isn't anything new, but what are they doing? They're pushing fear out there and they're catering it to a message that has nothing to do with it. And I see some of these posts like, this is what it was 6 months ago. You're talking about January and February when people are like sitting still compared to June? Come on now, but again, it's unfortunate. And that's where we have to really know our stuff, right? And again, pricing ahead of the market. Yeah, I want to wait until fall. I want to wait until winter. Okay, well, let's look at the trends for the last few years and look at what typically happens. Look at where these price points are. Let's not forget we're in an inflation economy right now. Everything is inflated. Real estate is no exception. Okay. And what do people think is going to happen? Like magically one day a button is going to be pushed and then all the prices are going to drop? It's not realistic. They're doing things, raising interest rates to calm the economy down. What is that? What is that calming the economy down look like? Well, okay, we're raising these interest rates. We're changing affordability, right? So you can still qualify, you can still buy. We're just changing the affordability. There was too many people who could buy and not enough inventory. Okay, so with changing this affordability, now we're hoping that buyers will start to go out, sellers will start to get nervous and start putting their home on the market because they think prices are lowering. And that's the plan to kind of level things out, right? What's going to end up happening? Now people are going to start rising to the expectation. Okay, well, my payment before was going to be $2,000. Now my payment is going to be $2,500. So me rising to the occasion is budgeting different, right? Because if you're truly still trying to purchase something, you're going to do it. So again, this is very, very, very important that you don't let this be a deterrent to lose business, but really have those conversations with people and make sure that this decision on waiting or on trying to list their house for way more than people are willing to pay for it, you're able to have that intelligent conversation behind it and say, no, here's why you should do it this way. And here's why you should do it now. Does that make sense, y'all?